Hello and welcome to the day ahead. It is Wednesday, January 14th. I'm Nadine Blaney. Well, Aussie stocks are now set to open 6 points lower at 8,878 after U.S. stocks extended falls to end the session. The Dow ended down nearly 1%, the S&P 500 off by about 0.25%, the Nasdaq slightly less than that. Trump's credit card intervention, tariff threats against Iranian trading partners, and questions over the continuation of Fed independence set that negative vibe on Wall Street. The closely watched consumer inflation read reinforced expectations, though, that the Fed has room to cut rates. Details on that to come. JP Morgan shares initially rose after the largest reporting fourth quarter profit that beat analysts' expectations, but shares then fell as much as 3% in choppy trading after the bank said a proposed cap on credit card interest rates would hurt U.S. consumers and the economy. Shares of Bank of New York Mellon reported a rise in fourth quarter profit and lifted its target for a key profitability measure. Shares were up by close to 2%. Still in quarterly reporting season, shares of Delta Airlines closed down after its 2026 profit forecast fell short of expectations. It also dragged down other airline stocks. Other major earnings releases loom, including Wells Fargo, Citigroup, and Bank of America. Shares all fell ahead of their quarterlies, as you can see. Bigger picture, though, with the oil price rising, oil majors outperformed, including Exxon and Chevron. In fact, Exxon shares hit a record high. To that, inflation data and expensive food and rent lifted the consumer price index 0.3% last month for an annual gain of 2.7%. Core CPI rose 0.2% in December. Now, those readings came in line with expectations largely, or slightly cooler. Traders now see a June rate cut after Powell is no longer the Fed chair. Risk-sensitive currencies, including the Aussie dollar, rallied after the report, and the U.S. dollar pared its gains. U.S. Treasury yields dipped in the wake of that CPI read, finishing at 4.179 for the 10-year. Now, the U.S. president's pursuit of Federal Reserve Chair Jerome Powell is continuing to raise the alarm, with 3 former Fed chairs signing a statement decrying the administration's assault on central banks' independence. They warned this is more typical in emerging economies with weak institutions, that's a quote, and saying it could have highly negative consequences for inflation. Global central bankers, including RBA Chief Michelle Bullock, alongside the ECB, the Bank of England, the Bank of Canada, Sweden, Denmark, Switzerland, South Korea, Brazil, and France, signed a declaration saying Powell has acted with integrity and that central bank independence is crucial for keeping prices and financial markets stable. And separately, the World Bank says the global economy is proving more resilient than expected, with 2026 GDP growth expected to improve slightly over forecasts from last June. To commodities, and oil prices surged by more than 2% as the prospect of disruptions to Iranian crude exports really offsets reports that Venezuela is reversing production cuts. Gold and silver hit a record as the U.S. inflation data cemented bets for a U.S. rate cut or 2 coming this year. Copper prices, though, did slip, but losses were capped by supply concerns and specky interest. Well, coming up today, we have November's vacancies data. That's job vacancies and building approval figures from the ABS. U.S. PPI, so producer price indexes for November, and the current account balance is due for the third quarter. U.S. existing home sales data also comes for December. And overnight, China will release the trade balance for December. Well, that does it for the day ahead. I'm Nadine Blaney. We'll see you tomorrow.